Per usual, everything on this channel for educational purposes only and is not intended as financial advice. It is Macro Monday on this MLK Day, Inauguration Day extravaganza. Let's take a look at some macro data points here. Markets obviously closed today. Will be interesting how things pan out the rest of the week. Last week we had over 2.2 billion in inflows. This is, of course, James's report from CoinShares. 2.2 billion in global ETPs here. Most of that almost exclusively coming into BTC. Ethereum getting a nice slug finally. Solana not so much. We'll see what happens with that. Post Trump coin, if Solana starts to get love. Ripple also picking up a little bit on the flow side of things. And just digging into volume and open interest and everything. This is where you want to be. You know, you don't want to be ignored. You want some level of excitement and attention. So to see open interest where it is, great. Volume on futures also elevated. Basis trade, basically the premium on the future side, is elevated relative to anything else in the world, but for BTC it's still down, so there's not a lot of euphoria there. And we go into this era, this next 4 years, with a new regulatory environment ready to play ball. So not only do we have some products ready to go, we have some idea of what people want, but now the other side of the equation is certainly more welcoming than the previous administration, and that should open doors for things like the flows. We should see flows come in a bigger way. We should see career risk come down. We should see just comfortability with digital assets increase if there isn't constant regulatory attacks. Every week, every headline, the headline risk for people not understanding of crypto is high if there is constant regulatory actions targeted at you. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PVI, DBA, Kraken. On the BTC here, we have been quite volatile. I don't think that I've seen any specific executive orders, EOs, in regards to crypto as of yet. The market appears to have been waiting on that with bated breath and sold a bunch off. Fine. We briefly hit a new all-time high. Great. You don't hit all-time highs in a bear market, I can tell you that much. We're getting this TK recross here, likely today or tomorrow. That is never a bearish sign. So I'm very optimistic about the rest of the quarter, the rest of the month. What we'll actually see will probably be relative to news around an SPR or whatever else. But if you're bullish, the possibility, you're probably already in, right? And that's part of the problem with these setups and these trades. I don't think there's too many people waiting for something, necessarily waiting for an announcement, but there is an expectation of the announcement. And this is whereby the rumor sell the news comes in. Not saying that that's exactly what's going on here, but certainly a part of it. So where could this go this quarter, this month? If we continue to break up, I like this 120, 125 region. If the bullishness here continues, it's tough chart pattern wise, and I'll get to this with the legacy side as well. Going into 2025, we've been bullish for a minute. Things look great on the trend perspective, but we don't really have any setups pending and ready to go. Going into 2024, we had honestly a similar concept, a similar idea, but in my mind, going into 2024, we had an event, we had a known sell-off of GBTC that was going to happen no matter what. It was just a matter of how much was this going to sell off. Eventually that morphed into a tradable chart pattern, and the rest is history. So that may occur here. And you can see this TK crisscross, similar idea. It's never bearish. When you see this on the daily, it's never bearish. The cloud's whole existence is trying to continuously throw you back into the trend when it is sure that there may be a trend forming or has formed. And we'll see this on SMH, same story. As messy as this looks and as volatile as it's been, as bearish as I was 2 weeks ago and the week after that, that's gone. It just is. Now, what we don't want to see is obviously losing 100, losing 95, losing 92. Losing 92 again is certainly not bullish. And the cloud's going to have a very hard time course correcting if, let's say, we lose 100 and immediately break through 92. You know, the cloud's just not going to pick up on that on the daily. So that is a risk here. But in a vacuum, trend looks very good. for BTC, and as long as it looks decent for BTC, most things should continue to do fairly well for the remainder of the year. Legacy calendar this week, not too much on numbers. PMI coming at the end of the week. Next week we have a GDP print, we have PCE. So that'll certainly be more exciting than this week. And oh, by the way, we of course have Jerome Powell up on the mic for a meeting, which currently is a basically 100% chance that we're not going to see a hike or a cut. There will be a lot of questions asked about, where do you think we're going? Do you think you were wrong to cut thus far? What do you need to see to hike again? He's going to say, we are data dependent, meeting by meeting. Every meeting is a live meeting. As long as unemployment is fine and inflation is still above 2%, but not there yet, we're probably going to keep rates where they are. Okay, that's what I'd say if I was him. And so far, so good. If we get data prints to shift rate probabilities otherwise, then we will see the dollar fly up and down in either direction. But for now, we're kind of in this equilibrium stasis until we get information to push us out of that otherwise. Could tariffs do that? They could. Could mass deportations do that? Sure, right? We'll see it in this number here in Truflation, which is sitting at a decent spot. Now, no one wants to live through 2.9% inflation, but it's better than 10. I'll give you that. The issue here is we've pulled forward 10 years of 2% inflation in a very quick period. So despite the year-over-year number being elevated but reasonable, that's not the point. The point is the aggregate number, which everyone is living and feeling, and they are certainly aware that a couple of years ago, everything wasn't as expensive as it is now. But based on where this is headed, it looks like we're going to continue to range in the near term. But again, if any of those policies disturb Truflation, it'll show up, right? That's every day. That's a data point. Looking at the projected CPI for January, it is projected to come down month over month. PCE is going to be lagging. I think this is a elevated PCE for December, but this print, which will be not for, like a month and a half or whatever from now, will be coming down. So that's headed in the right direction, as is CPI, and that's good news for everybody. GDP also still sitting here around 3%. Something on the liquidity front to be mindful of is debt ceiling, TGA, also the reverse repo. This is a pile of inert capital that is outside of the ecosystem, outside of the liquidity metric. This is where the liquidity came from in 2023 when everybody was turbo bearish on the macro side. This is how and why things went higher. So fast forward to today, and we are at the very bottom of this 2 trillion pile of money back into the markets. So the question is, if and when this drains to zero, how will markets react? What will the Fed have to do? We actually did have, I believe, one failed credit union last week and one failed bank last week. Now, these are tiny. These are nothing as far as total assets on the books. Banks and credit unions fail randomly all the time. But if that starts to pop up, that points again to liquidity issues in the pipes, in the ecosystem. So definitely something to continue to watch throughout the beginning of the year here. And if you look at the liquidity equation in the yellow, it's a good sign that this is flipping back north. And it's a good sign that BTC fought off this huge downdraft in liquidity. And if we can just ignore that and stay above 100, stay above 90, we should be fine for the remainder of this quarter, certainly. But if we see any liquidity positive events, if they end QT and move to QE, if we see some sort of BTFP type program again, if we move to yield curve control, if whatever, right? It doesn't matter what it is. If it's liquidity positive post event, it should be bullish for digital assets and especially alts. Alts especially need liquidity to move higher. Dollar, I think, is down from this print. I think it's at 108 in change. It still doesn't look bearish. If this were a trade, would you buy, sell, or hold? If this were an altcoin chart, it looks a little late to enter up here, but it's certainly not bearish yet. You could say, well, there's a TKC clamp forming. Maybe this rolls over. Maybe this does X, Y, or Z, but it hasn't done that yet. It's harder for anything denominated in this to do well as long as this is rising like this. So we don't need the dollar to go to zero, but it's helpful if the dollar is weaker than it is now for digital assets. So it's definitely something to continue to watch this year. As far as the S&P and the indices go, the difference between 2025 and 2024, even 2023, was coming out of 2023, we had this diagonal trend line that we were finally breaking We had this kind of megaphone pattern throughout the entirety of 2022. We were bearish on trend metrics. When everybody was bearish in 2023, I was out here saying, hey, this might be an inverted head and shoulders going into the new year. We ended up getting AI, we ended up getting whatever else, right? When the technicals are favorable, the narrative, to me, finds a way. So 23, we had a multi-month pattern coming out of that. 24, we had a multi-month cup and handle. So we went from a bottom to a continuation. And now in 25, is there anything here? There's a massive channel, obviously on trend. Nothing that I can really discern here that's super loud and proud and ready to go for 25, other than just a vanilla bull trend. It certainly looked like we wanted to dip back into the cloud. We wanted to break down, similar to BTC, hasn't done that yet. So as long as we can stay above the cloud, as long as we can stay bullish on trend metrics, we should be fine for 25. But any signs of this rolling over, any signs of the Qs rolling over on the daily, and BTC should be dragged down with it. If these move higher, it's likely because, partially at least, the dollar moves lower and vice versa. So all this stuff is certainly correlated. This is the NASDAQ QQQ channel that we're in, and it looks great. You know, you can see little bouts of weakness, 23 and 24, but as long as we can hold above the trend metrics, we should be okay. Now you can see there's better times maybe to buy or sell based on this. Certainly hitting more of a bumpier patch here, but nothing that's outright bearish that says we're in deep, deep trouble. Not here. SMH, very similar. Going into 2024, beginning of the year, I was out here saying, this is a cup and handle. This thing's going to do really well. I traded it. We talked about it. It did really well. And the difference between 24 and 25 is up here. What does this look like to me? This doesn't really look like much of anything. It tried to break down, tried to head and shoulders out. Hasn't really gone anywhere for months. But to me, the technical story here is less compelling than it was in 2024, certainly. That doesn't mean it can't continue to do well. We can look at SMH on the daily. And if you had to choose, are you bullish or bearish above or below this consolidation? I mean, you're certainly not bearish up here. Now, it hasn't gone anywhere since like March, April, May, sure. But if you had to make a choice to be bullish or bearish, it makes more sense to me to be bullish up here, even though this looks like a bunch of nothing, certainly. It's still more compelling long here than it was back here to me, because this was the head and shoulders risk. So to see it sort of capitulate time-wise, that timed out, the bullishness timed out, and this could be a setup for the remainder of the year. Its counterpart, IGV software, to me, I'm still in this trade. I think it looks fine. It did have this rounded top, head and shoulders breakdown, and it's probably something to watch on a re-add later in the year if this can get back above the daily cloud with a bullish TK cross. Same story every time. But looking at the two, the idea was that SMH was very strong. That swung to software, and looks like it's about back to the equilibrium. You know, IGV clearly winning from May to November, but now it's more of a wash and there's less of a technical setup here for this relative pair. So maybe it's time. Maybe it's time for SMH to start to do well. Here's an example of a place where you'd probably be less bullish. At least I certainly would be. This is ANF. Similar idea, multi-month triangle. It broke down instead of up. Now it did break up first, to be fair, and it didn't matter, right? So could this be a fake out on SMH? Could be, maybe not, maybe yes. Nothing says you have to do anything, right? And I don't think many people are doing anything here on SMH. They'd rather wait. If we look at what happened with Costco in 22 and 23, similar idea. These triangles really don't want to go anywhere because you have people buying and selling the extremes. So to wait and to give it time, to give SMH even another month just to see what's going to happen here, I think it's certainly reasonable. Because once this gets decided, there's a high likelihood of markup of bullish continuation or bearish continuation, that sort of thing. So I don't think there's a rush to do much of anything. This is a random chart I also thought of. This is Stellar USD. I only remembered this because I was trading this along with PTC at the time. Same idea where it looked like this was going to break up. It looked like a year's worth of consolidation ended, and then, you know, the entire market in 2018 and 2019 fell apart. So despite these patterns looking like they're over, it's almost always better to just give it a little bit more time, just a little bit more time. NVIDIA is another case of that, where this thing has been chopping around for months. It doesn't look like a great setup either way to me, but it certainly leans bullish if it can get back above 145. Sure, right? But maybe you don't do anything on this until February. It's not like screaming at me here to do much of anything because the risk reward setup doesn't really seem to be there. Your downside risk is like 90 with a coin flip. That would be my read here. You're one EO away from something happening with semis. So I just think it makes more sense to wait this out, be a little bit more patient in the beginning of the year. Now, the greatest trader of all time, Nancy Pelosi, did rebalance her portfolio. It looks like she sold some NVIDIA and bought some Google and Amazon. So let's look at that. I had mentioned Amazon yesterday. We'll take a look again. Apple just looks atrocious to me. They consolidated for months, broke out, didn't hit the target, immediately gave it all back. Just today, looking at this is not something I would touch. This is just a huge mess. So of the Mag 7, Google certainly looks better to me than Amazon does. It looks like it's consolidating. You could say, well, there's monopoly risk or whatever, regulatory risks here. Maybe the Trump admin is going to be more punishing than the Biden admin would have been. Perfectly fair and reasonable critique, but the technicals look to me ready to go as far as bullish continuation for higher highs there. Amazon, unlike the indices, to me does have a compelling case here still to be made for some sort of cup and handle or inverted head and shoulders or whatever that could still push this higher. So I do like this setup here, similar to Google, where it looks like it has a plan, it has a story, it's ready to go. It's not just sort of meandering around waiting for something to happen. And this is on the daily again, whether this is a flag or a pennant or something. I like how this has the potential to break up. That's it, relative to the rest of the Mag 7. Miners, kind of a different story. We look at these charts, we look at the S&P in, if I can find it all the way back here, just the sheer channel, right? Like this is chop, it's up chop, sure. But for the most part, volatility relatively low when we're comparing to something like WGMI, where we are spanning the entirety of this channel over and over and over. It is a rough hold. It is a rough hold. We're smack dab in the middle. You could argue if we can get a close above the daily cloud here on the Bitcoin miners ETF, that would be a decent place to take a shot. For me, I'm only ever taking a shot at this in two places. It's at the bottom of the channel or back above the cloud. The third option would, of course, be some sort of pattern or something. But so we're getting to a point where we might see a move on this, and maybe this is a cup and handle, right? I don't know. It's just so noisy. It is so choppy. If this does well, it's probably not because of BTC. It's probably because of some sort of HPC, AI, energy, data center, right? It probably has nothing to do with BTC. It probably has everything to do with energy capacity. So if you're bullish on that, this probably does very well. Or individually, some of these miners that are plugged into that. On the exchange side, buy, sell, or hold, what is hood here? To me, it's not a buy up here for me. It looks fine. It's certainly not bearish. It's up almost, 5x since 24. You could say, well, they're going to be listing all these things. Crypto is back, et cetera, et cetera. Okay, that's a narrative I can buy into. I don't doubt that this continues to do well. It just looks a little stretched to me, even up here. And it has hit the old 50% fib of the drawdown at 50. So I certainly like trimming the position. I do not like adding to positions up here. I don't hold any hood currently. Something else to think about on a relative value basis, similar to ETH-BTC or Sol MSTR. We can take this, to another degree and look at like coin hood or exchange versus exchange. On an individual basis, if you're bullish coin, you're hoping for this. You're certainly hoping for just crazy crypto mania for this to break up, whether it's the VC book getting marked to market or FASB or whatever. I just think there's a lot of risks here for other competitors to Coinbase to crop up, whether it's banks via the SAB 121 repeal or other exchanges or TradFi exchanges adding crypto. So I think you have to be careful about that from a competitive perspective, but just in a vacuum, this is what you're hoping for on coin. Absolutely, right? That this whole thing was just a mega consolidation and that it hasn't started to break up yet. Certainly possible. I wouldn't rule that out. But when you look at things like coin MSTR, to me, where do you want to put your money? Now, this looks a little stretched. It looks a little oversold. basically it's ETH BTC, basically. And my guess is if and when ETH BTC turns around, you'll see coin MSTRs turn around. You're going to see coin turn around. But coin is kind of traded like the miners. Coin is traded like CleanSpark. It hasn't really broken out of the pack just yet. It's probably a good sign to see HOOD as strong as it's been. But coin just kind of meandering here at that 300 zone. Then lastly, I haven't talked about this one in weeks, but Roblox did very well on that multi-year breakout, regardless of all the headlines, the Hindenburg short report and everything else. Looks like it's on its merry way to the target there. So I think this is a stock picker's market. This is a technical analyst's dream here with some dispersion between large caps and small caps, dispersion between intra-sector individual companies and charts. And I think if you're trading things like ETFs, basket ETFs, whether it be WGMI or SMH or whatever else, I think it makes a lot of sense to look into those baskets and see what you like and don't like, because my guess is you're going to see a lot of very obvious things between all of these basket ETFs where it probably makes less sense to be involved with these broadly, and maybe more sense if you're actively trading this stuff to minimize exposure to some of the obviously bearish charts. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.